President Lee Jae Myung has concluded his visit to the U.S., which featured a summit with President Donald Trump, among other activities. Much of the visit was focused on the economy as the tariff issue continues to loom over South Korea. Before heading into this summit, South Korea and the U.S. had struck a deal to lower U.S. tariffs imposed on Korean goods. The summit was largely expected to be the stage to close the deal completely, as a $350 billion US package was offered to the U.S. by South Korea. But as of now, nothing new has come out in terms of the details. Now, to discuss this further, as well as the economic cooperation discussed during the summit, we're joined by two experts today. First, we have Professor Sangmi from Ewha Women's University, and we have Professor Shim Myungkyu of Yonsei University. Good to have you this evening.
Thank you for having me today.
Now, before we get deeper into the summit, I want to kind of ask you for your review of the summits, economically speaking. What stood out most to both of you guys? Professor Shim, let's start with you.
Yeah, to me, the most important point of the summit was that there was no further renegotiation in the trade deal at the summit, which was made about a month ago. We saw many cases that changed the treatment after the summit in a way that favors the U.S. For example, Japan experienced the issue that the interpretation on the tariff rate was different between the U.S. and Japan's government, so that there were some issues related to the trade deals. Instead, the Korea-U.S. summit lowered the uncertainty about the further negotiation of the trade deals, which made policymakers and economists somewhat relieved, in the sense that the military spending issues and how to finance the investment fund have not yet fully resolved. I think this is just the beginning of the series of the talk between Korea and the U.S. However, as I pointed out, one dimension of the uncertainty that really made policymakers worried, trade policy uncertainty that can potentially drag down the Korean economy in the long run, was resolved, which is not a bad start for Korea.
Okay, Professor Shim, Professor Che, would you like to add anything from your perspective?
For me, what really stood out was the scale of investment pledge. The South Korea, announced a $350 billion US in commitments, and then on top of that, the Korean companies pledged another $150 billion. So this is an extraordinary figure. To put it in the perspective, it's larger than the annual GDP of many countries. But what is even more important than the size is the focus. These pledges are, centered on strategic industry, such as semiconductors and clean energy and advanced manufacturing and shipbuilding. So the key takeaway is, the summit was not just political theater. Economically, it was about deepening the Korea-U.S. alliance through money, technology, and supply chains.
Now, speaking of the pledges that were made in the U.S., I wanted to ask you this, Professor Shim. South Korea pledged $350 billion in the U.S. ahead of the summit. Now, after watching the summit, do you think it's worth it?
Yeah, in terms of the value of the investment, I think we should wait until the details of the fund is further negotiated. For example, how the investment fund is financed and how to divide the revenue from the fund can significantly alter the costs and the benefit from the fund. However, in the sense that it is inevitable to make such a huge investment to close a trade deal with the U.S., it is already worth it from my perspective. As we all know, exports and imports take a very important role in the Korean economy. Particularly in 2023, the share of exports and imports in GDP amounted to about 90%. And the US economy is still the most important market, not only for Korea, but also for the other countries, which makes the trade deal be really important to keep the price and competitiveness in the US market. So while the investment in the US can have a side effect on the Korean economy, since it can lower investment in Korea, I think it is worth it. The point would be to make the details of the investment fund not to be too harsh for the Korean economy.
Right. So now to you, Professor Chae, you've mentioned this just now. On top of what we just talked about, Korean companies pledged another 150 billion. Now, where is this funding expected to come from, and what are these companies, hoping to gain?
Well, let me break this down first. Where does the money come from? Most of it comes from the large Korean conglomerates like Samsung, Hyundai, SK. As you know, they already have a very large cash reserve. In addition, they can raise funds by issuing global bonds in the US and Europe. And in certain cases, there could be government-backed financing to support a strategic project. Second, why are they doing this? The answer is protection and opportunity by investing in the United States. Companies are, buying a kind of insurance. So they want to make sure they have access to the U.S. market. They reduce the risk of the tariffs or trade restrictions, and they gain political goodwill in Washington. So at the same time, they are also creating new growth engine abroad, semiconductor fabs, EV battery plants and clean energy factories, So this is not just a charity, it is like a strategic decision, both defensive insurance and very offensive opportunity, I think.
Mm-hmm. Now, I wanted to build on from that. Professor Shim, now back home, we've seen new government policies that some companies view as unfavorable. Did that push big firms to look more toward U.S. investment, like Professor Chae mentioned, protection and opportunity, maybe?
Yes, as you mentioned, the new government and the ruling party seem to impose several measures that are not favored by firms or the large firms. We can think of the so-called yellow envelope bill as one particular example, which can potentially increase the production cost in Korea because it increases the negotiation power of the union and workers during the wage renegotiation between the firm and the workers. I think this can raise the incentive of the large firms to invest in the US, including building more factories. However, this seems to have some limited effect on the US investment because labor costs in the US is higher than that in Korea. And passing such bills does not seem to critically increase the labor costs in Korea to that in the US. Rather, it may increase the incentive of the firms to invest in the other countries which that provides lower labor costs. However, given that such countries are also heavily affected by the higher tariff rate imposed by the US government, it seems that the effect of the new government policies on this decision to invest in other countries can be somewhat limited. But I want to make the final remark that if similar policies are further implemented and if the negative effect on the revenue of the firms is accumulated further, it may trigger more investment in the US in the long run.
Right. Now, shifting focus back to the 350 billion and the 150 billion together, there's no written agreement, right? So, Professor Chae, does that make these pledges really credible, or are they more symbolic?
That's a very good question. And to be clear, these pledges are not contract. So if companies don't follow through, there are no legal consequences. So yes, in some sense, they're symbolic, but the symbolism itself is very powerful. Why? Because it builds a trust and goodwill it tells the U.S. governments and global investors Korea is serious about this partnership. And if you look at the history, many summit pledges start out symbolic, but they turn into real project later. So factories, research center, jobs, like that. So scale may be smaller than the announcement, but the direction is clear. So I would say, think of these pledges as a signal players. So they show where Korean companies are heading.
Right, right. Now, part of the deal that we're talking about, and there's no detail yet, but there's one thing sure, that is that shipbuilding is getting a lot of focus from that package deal. Now, Professor Shim, how mutually beneficial is this deal called MASCA?
Yeah, in terms of the shipbuilding industry, I think that this deal is beneficial to both South Korea and the US, but in different aspect. But let me first point out the benefit from MASCA for Korea. The share of Korean shipbuilding is the second in the global market following China. And the share of the US shipbuilding industry in the global market is less than 1%. And given that the US cannot rely on the Chinese shipbuilding firms, Korean firms can enjoy benefits from this trade deal. Importantly, more than 40% of the investment fund will be utilized for the shipbuilding industry, which can increase the profitability of the Korean shipbuilding firms by taking greater portion in the US market. And since President Trump repeals the policies to generate energy eco-friendly, and that can increase demand for fossil fuels, which increases demand for LNG carriers, in which Korean firms have competitive advantages in the market, is also good news. And how about the US market? The US can also benefit from MASCA because shipbuilding industry is not just capital intensive, but it is also labor intensive, so that it can boost the employment of the areas that have been behind the other areas, or so-called Sunbelt. However, it will take a lot of time to produce ships in the US because it takes a lot of time to build factories and to buy the new machines and make the workers to have more experiences to increase or boost the productivity. So the benefit of the US can be realized in the long run, not in the short run.
Right, but I really feel like some of the viewers here might not be caught up with shipbuilding industry. So Professor Che, if we could take some time to actually dig deeper into this, like why did U.S. shipbuilding decline in the first place? And I think Professor Shim actually touched upon this lightly, but where do Korean shipbuilders stand globally right now?
As you mentioned, U.S. once they had a very strong shipbuilding industry, but it declined starting in the 1980s. I can say there are mainly three reasons. First, a very high labor cost. Actually, ships becomes much more expensive to build in the U.S. than the other countries like Korea and China. Second, fragmented industry caused that decline because American shipyard didn't consolidate, so they lost the scale itself. And basically, most of U.S. yard, built military ships while commercial shipbuilding moved, overseas. In contrast, if you look at the Korean industry, shipbuilding industry, Korea took the opposite path, you can say. So Korean shipbuilders consolidated and invested heavily in R&D and specialized in high value ships like LNG carriers. As a result, today Korea is one of the top global leaders, competing mainly with China. And Korean yards are known for their advanced technology, efficiency, and reliability. That's why if the U.S. wants to rebuild its shipbuilding capacity, it cannot do it alone. It needs partners, and Korean firms are the natural choices, I think.
Right, and kind of for a lot of people, shipbuilding between Korea and the U.S. kind of came out of nowhere, right? Like we're talking about conventional things that Korea and U.S. used to trade with, like chips, autos, and speaking of which, we don't know the item tariffs for bio pharma industries and the chips industries yet. So now, Professor Shim, there are more tariffs on the way, and there are deals that Korea and the U.S. made saying that Korea will be favored as the as the lowest tariff when these things do come out. But how worried should South Korea really be? Is the problem still going on, or do you think the relationship between President Lee and Trump kind of sort of makes us be concerned less now?
Yeah, I think there are 2 points that we need to worry about. While I pointed out earlier that trade policy uncertainty is somewhat resolved after the summit, that is just the kind of the beginning of the series of the talk. Most importantly, how the U.S. government treat the already agreed treatment, which we have observed for the last several months, shows that such an uncertainty is not yet fully resolved. And details of the investment funds need to be negotiated further, given that both the Korean and the US governments have disagreed in some specific details and we don't know what to come. And this can potentially affect the future pass of tariff, so that while the President Trump said that there is no change from the trade deals, we are not 100% sure whether that is really the case or not. Also, there is another dimension that we need to worry about, which is the potential negative effect of the tariff rate on the US economy and also the global economy. First, overall price level will increase globally, especially in the US, due to the higher tariff rate. And this seems to already take place in the US, as the CPI and core inflation rate was higher than expected in the several 2 months. Second, potential drag down of the global economy can lower export of Korea, which will lower production but increases unemployment rate in Korea in the medium run. So what we need to care about is that there can be some changes that we did not expect in the future. So we really need to focus on the potential changes in the trade environment.
Right, and I think you've built up perfectly for our next question. And I wanted to go into sort of the global supply chain. As you said, prices will increase with the tariffs, and we're not seeing the effects yet, right? It's just started, and we have to be prepared for the potential changes. So let's zoom out. What do these deals mean for the global supply chain, and especially amid U.S.-China rivalry? Professor Chae, I'd like to ask you this question, especially focusing on the fact that, U.S. has been dealing with China for a long time. We don't even know their trade deal yet, but they do rely on manufacturing aspect for China. So what do you think about the potential changes in the global supply chain?
I think this is a very big picture. These deals are not only about investment dollars, they are about reshaping the global supply chain, as you said. So the old model of globalization was just all about efficiency and lowest cost. But today, because of geopolitical rivalry between U.S. and China, we see a shift toward what I call like a ally shoring. So building supply chain mainly with very trusted partners. For Korea, this brings both opportunity and risk. So opportunity, I can say, is a closer integration with the U.S. market, stronger protection from tariffs, and more participation in the strategic industries. But the risk is, we can easily guess, losing ground in China, which is still one of the Korea's biggest trading partners. So the challenge is balancing how to deepen ties with the U.S. while still keeping, enough diversification to avoid over dependencies. In short, these deals means less efficiency, but more resilience. Supply chains are no longer, I could say, only about the cost. They are about security, alliance, and long-term stability.
Right. I mean, the challenge is, like you said, balancing, and we're at a very uncertain times right now with the global trade issues. Now, I'm afraid that's all the time we have for tonight. Thank you so much to both of you for joining us, and thank you for watching.
Thank you.
Thank you again for having me here.
And that will be all from us on Within the Frame. Be sure to tune in next time as we continue to explore the stories that matter. Until then, stay informed and engaged.